Hello, good morning. So today is Thursday, 30th of August. Time check is 9:27 a.m. East Africa time. I'm in Kenya and Nairobi to be specific. And so today has been an interesting one after yesterday's moves that we saw in this market. Today, so we are trying to look at the market to see what the market is about to do. And I'm going to start us off by just doing a very short video where we're going to look at what price did yesterday and what it is doing today. So it's very important. First of all, if you're new and you're seeing this as your very first video from me, so I trade gold, and when I trade gold, what I try to do, I try to look at the different levels and what gold is doing at different levels. So I'm trying to look at what gold is doing here, and we have established that yes, the initial high of the week was formed on Wednesday, and the initial low of the week was formed on the same day. So we have been trading in within that trading range. And so yesterday we had a very nice drop with the news. So this drop came into this candle, of which I was very careful to check and ensure that it does not close below it. That's an Elliott wave principle. That's important. And so today, okay, after that, so we caught a buy around this area. So I had sold it from up here, then we dropped with it to this level. So I did not hold all through this. So I got out just before the news was released. Yeah, because yeah, that's what my plan says. My plan says trade after the news, but I know that I was already in this trade, so maybe moving into break even would have worked better. But because I was working on getting funded, I just decided to I decided to get out of the trade. Give me just a second. I check how my trade is doing. Awesome. So I took some buys down here. So this is like my first TP. Careful to see if the market will get there. So let me move that one away so that we continue. So control T, let me see. Okay, so that's okay. So we leave that one to continue. So we might be having a reaction to this order block here. We might be having a reaction there, but let's just continue the discussion first. Then we will look into this in a few. So as I was saying, so I got out of this a bit early, but I caught this sell because I was looking at this as a possible wave 1, wave 2, wave 3. So this one became wave 4 because you see it did not close inside wave 1. It closed actually above it. If you can just introduce a line here you'll be able to see what happened. You see, so this in ICT terms, this is where is that? Not this one. These two form an order block of sorts. This is a propulsion candle. So propulsion candle, when you trade into a propulsion candle, expect price to be rejected and pushed higher. So price came higher, and I was able to actually pass phase 2 of 5%ers with this move. And then I'm out. So I have to wait till Wednesday next week for my funded credential for my funded account to be activated. Okay, because of this reaction that I'm seeing here, I was expecting to take my first profit here, but because of this small reaction that I'm seeing around this order block, I'll consider taking one of the positions out. Let me see. I'll take one of the positions out and move the other one to break even. This is just a small live account that I'm trading. So that is closed. And then I've moved my stop to break even. I'll get a re-entry later. But for now, that's all I can do for that. That's awesome. Yes. So Yes. So what are we looking at? Now, after I noticed that we had divergence here last night in the same small account, I managed to grab a sell around these levels just when New York was closing. So I took this and I told myself today I will not wake up early. Sometimes I wake up to see what Asia is doing. So I took this sell here and I allowed the market just to play out. And then in the morning around 7 a.m. Kenyan time, I closed this one out before I took my son to school. And then I called this one on Twitter. I called this one on Twitter, and I was looking for an N graph here, an N graph. Then after that N graph, I also take the week. Since the week has traded above this high, so we have a new high. So I count it as a break. I know there are guys who use bodies, but I use that, and it's okay. So this is the reaction that we've had. This is the reaction that we've had with price, and that was just awesome. That was awesome. And concerning that tweet, here it is. You can see good morning. Time check is 8:23 a.m. East Africa time. The lower divergence signal will only be confirmed once we have an N graph by the close of the hour. Long to mid-term target is still 25.50. I'll show you why I think this is a possible target. Notice that the current high and low of the week were formed on Wednesday, and we are ranging in there. So that is what we are doing. And here is the funded certificate for the 5%ers. So if you're not following me on Twitter, feel free to follow me. Just this is me. This is my profile picture, and this is my Twitter handle or my X handle. So this is the funded certificate. It was awesome. It was awesome to have passed that. So yes. So now we go back to the charts, and now let us look at what we are thinking about this move. So we had said that we are looking at this as a possible 1, 2, 3, 4, 5. So if this is a possible 1, 2, 3, 4, 5, I'm still expecting price. There's a possibility price might actually come and take out this low. That's why I'm a bit cautious with this move to the upside, and time is still, we have not yet, we have between 9:34 all the way to 11. Actually all the way to 11, so price might actually drop and take out this low first before we go up. So since this divergence has not we have not taken out this low, the way I trade divergence, let me show you something. And actually I'm going to collapse that trade too, just based on what I've said. That trade is collapsed, so both of the trades are closed. I am not worried. I am not worried about I'm not worried about getting out of a trade and coming back to it, because I happen to know how to catch trades when I need to catch them. So this was a nice one. This move was a nice one, and this reaction here, it might actually come and take out this low before now we finally go up. So this was good because we have reacted to it, and so this is how I like to see divergence play. So one thing I like seeing divergence do, I like for example, we have this upper side divergence, this and this. So because this high formed this low and this high formed this low, so what I would ideally want to see, I'd like to see price trade down and take out liquidity that is here. Let me show you liquidity that is residing below this level down there. So and just to show you something, this is my XNES account, and you can see I have no active position. All my positions have been collapsed, and you are seeing me on minute 5 because I actually take not most, actually all of my entries on minute 5, both for the funded account and for this small account. And when I talk about small account, it's actually a very small account, very small account. So I love XNES. Not to toot their horn, but I love XNES, and I think I'm going to put my affiliate link on the description of this video, so you are free to join. I've also traded with Forex before. Actually, Forex is my oldest broker. Before they came to Kenya, I was trading with them from their global HF Global, and so I decided not to change and come to, and I decided not to migrate my account to their Kenyan branch because old habits. I think I'm a little used to what the others are doing. I'm a little used to dealing with the HF Global. So that aside, so let us just see how this one will play. But basically, what I'm thinking, just my thought process, I'm thinking this divergence, yes, it has propelled price up, but this has not yet closed. So I'm kind of thinking that there's a possibility. Let me show you. This is a possibility that the market can actually come to around this level. You see this level here, that is 2507. So that is an equal leg, 100% extension or expansion, depending with what you look at. So around this level. So I'm thinking of that possibility, and then it will be very, very nice if this divergence holds even when price comes here. Let's say, for example, price decides to come here. It will be very, very nice if this divergence still holds, and if it holds, not there, sorry, not there, I'm sorry. Let me show you. Not here, because the goal is to take out liquidity that is residing down here. So this can actually go all the way to 123.6, not 100, 123.6, because it is actually possible. As long as it does not go past 161.8, this extension is still possible. And I'm talking about this based on experience or my own observations in the market in terms of how divergence plays. So if this can come all the way down and take out this, you see 123.6 rests at around 2,503. So if we can get this dropping all the way here, this will be very nice. So if I can just show us by use of this. So we are talking about this possibility, this one, that, then we do this, and then after here we then now start going where? Start going up. So what are we thinking? What are we thinking here? So I'm thinking of this. I'm thinking of now this having finished the 5 wave moves, then we can have this as our wave 2 for our wave 3 to the upside. For wave 3 to the upside, you see. So this is like an alternative. Okay, this is like the first option that I'm seeing the possibility of the market doing since this divergence has not closed. I'm hoping that we can come and take out this. Although reason why I'm 50-50 is because upper divergence, lower divergence. So possibly the upper divergence has been closed by the lower divergence. If that is true, then this one will continue to go up, and we will only know that this option, the one that we expect the market to drop and come to 2503, this option we will know, we will confirm that it has been invalidated if we close above this order block here. You see this order block. If we close above it, we have to close above it for us to really know that we have been invalidated, that this move has been invalidated. But this is my first, this is like my first alternative. Second alternative, if it closes above this, then we are going to get a retracement. When we get that retracement, that will also be a nice one to go with. So I might do another update in case we closed up there. But for now, this is what I'm looking at, and I'm not very sure that I'm going to trade this retracement. Maybe I'll wait for it down here. Then, just to confirm that this is a good place to take our buy, you look at this as your dealing range low and this as your dealing range high, and just buy, even without using fib, you can clearly see. Let me get rid of this to at least declutter the chart, because I want to show you something. You can clearly see that low to high, this is the area down here is deep discount, and by deep discount I mean if you take your fib, drag it from the low to the high, you can see this is 0.75. You see, it's actually below 0.62 OTE, so 0.75. This is actually deep retracement, a good place to take our buy. So if we take our buy from here, we can then say maybe we take our TP1 at yesterday's high, and then TP2 we can hold TP2 to 25.50. So let us answer that question. Let us answer that question. I need to minimize this completely so that we have the chart. Let's answer that question. The question of, is 25.50 possible? So again, assuming that we are going with this option, the option where we expect price to retrace to around this level and then shoot up, then let us see if this is 1, 2, we are looking at an extension that can either be between 100% to 161 point, 160, not 161, it's actually 168.1, is it? Let's see. How comes I've not? Let's look at it. So this is low to high to our expected low. It is 1.618. Yes, that is the number. So you can actually see 1.618 is even past. It's past 25.50. So we can go past 25.50. Remember what ICT taught us? He taught us that when price approaches this round number, these big figures and mid big figures, it can either stop at 20 to 40 pips before, or it can go past it by 20 to 40 pips. So that's a possibility, and you can see 25.50, 25.60. This is about 10 pips. I don't know how you count that, but it's about 10 pips away from there. So this is the possibility, and you can see that this move is possible. Remember what we always say, waves don't move in a straight line, and actually price does not move in a straight line. So even the waves that you see forming on your chart are as a result of price movement. So price does not move in a straight line, and so even if we start moving to the upside, just know that this is likely not going to go in a straight line. And so looking at this, the move had started from here, so we were looking at this as a possible 1, 2, and then now we are looking for a 3, and now you see this 3, we have started with a 1, with a 2, so these are internals of the 3 that we are thinking about. So for now, let us just see how this one plays out, expecting it to come around this area, and then we'll see. If we get a drop to this area, that will be nice. So let's go to a lower time frame like minute 15 and see what price is currently doing. Okay, here it is, and I think I'm going just to shift and change a few things here. ZAO USD, let's pick forex.com. I like using forex.com. So that's forex.com. Then what I'm going to do, let me just remove all the drawings first. I want to see something in this price. So this is our H4. Look at that H4. That's very nice. We have this order block. Then when you go down to H1, what are we seeing? See, we've reacted from that area. So these are just extra levels of confirmation. And the big question here is, are we going to go below? Are we going to go below it? Are we going to go, where is H1? H1. Are we going to go below, are we going to go down here? So we just look at this. I'm giving you another alternative. That's why I've decided to come here. Remember, this is still divergence. And also remember that we also have divergence here. Where is that? Where is that? Here. Yeah, here. So when it comes to divergence, what you're looking at the oscillator that you're using. You can either use RSI or TDI. So we have a higher high, a lower high, and a lower high, a lower low, and a higher low and a lower low. But it is opposite in terms of its price. So what we are looking at here right now, we have this divergence, we have this divergence. So there is also a likelihood that the market might not actually come down there because of what we are seeing on H4. This is a H4 region. So price might actually be looking to just come back to 50% of this H4 order block and then push higher. So what does that mean? It means that after we have finished our 1, 2, 3, 4, 5 here, 1, 2, 3, 4, and 5 here, after we have finished this, price we know that what we wanted to see price coming and taking out this, but price can be held here and pushed up, and then we continue going up. So this is like alternative 2. Reason why I came here is so that I can show you the second possible alternative, that we can react at the midpoint here. So it was actually a good decision to close this buy around this area. So we can react from this area and go. See, we have like 13 minutes to the top of the hour. So we want to see what will happen here. And if this one continues the way it is continuing, then we are likely to, depending on what happens, we know that if we retrace into this area for it to hold, since this is a hourly time frame, for this to hold, we need it to close above this at around so we'll need to give it like an hour or so, unless we are aggressive. If we are aggressive, it means that immediately price hits here, we get a buy, and then you set our stop loss down here, you see, down here, or we just give it like 5 pips below it, and then we take our buy from here and go. Or we can wait for price to first of all bounce, and then after it has closed at around 11, then we now take our buys. If it has been held here, we take a buy and then move with it. If it has closed below, we continue waiting and now anticipate the price take out this low. Let no one lie to you that anyone knows where the market is going for certain. So what we do, we just look at what price is doing. We try and read price action, and I like what ICT taught us during the mentorship. He taught us that when you trade, always wait for price to meet time. You know, price is what is moving. Time, okay. I mean on our platforms, time has already been defined down here, but the candlesticks which represent price is what is being printed. So you wait for that candle to be printed at your strike zone, during a kill zone, and then you involve yourself with it. So that is what I wanted to show you, and that's what I wanted to show you concerning the yellow metal. So that's what I'm looking at. So I hope that has been insightful, and see you in the next update. All the best, trade well, and remember to respect risk. Bye for now. Bye.